Welcome back to the channel, and thank you for joining me. I'm Algabot, and in today's video, we're going to explore an expert advisor for MetaTrader 5 called Trend Pullback Reclaim. This is a trend-following, continuation-style approach that only looks to act in the direction of an already established trend and only after a short pause in momentum. Along the way, you'll learn how the strategy reads the trend using a moving average, how it measures momentum with the RSI, and how it sizes its stops and targets using the ATR. Everything in this video is for educational purposes only. So let's take a closer look. Trend Pullback Reclaim is what traders often describe as a continuation approach. Instead of trying to predict tops and bottoms, it waits for a trend to already be in place, waits for price to take a short breather against that trend, and then looks for momentum to resume in the original direction. In plain language, that's buying a dip inside an uptrend or selling a bounce inside a downtrend. Three independent conditions all have to line up before the strategy considers acting, and this layering is deliberate. By requiring several unrelated signals to agree, the approach aims to stay out of choppy, directionless markets and avoid leaning too heavily on any single indicator. The first condition is the trend itself, measured by the slope of a long exponential moving average, the EMA. The second is a pullback, measured by the RSI momentum oscillator cooling off. The third is the reclaim, where momentum turns back in the trend's favor on a confirming candle. The strategy was designed with liquid, trending markets in mind, such as major foreign exchange pairs like Euro, US dollar or Pound, US dollar, and stock indices like the US 500. That said, the time frame is never hard-coded, so it can be studied on anything from the 15-minute chart up to the 4-hour chart, depending on the settings. In terms of who this style tends to suit, it leans toward patient, trend-oriented traders who prefer fewer, higher-quality signals over constant activity. It aims for entries that sit close to the mean, which keeps the stop compact, while still riding the dominant trend for a larger target. As always, remember that trading involves risk. Losing trades are a normal part of any approach, and nothing here is a promise of any particular outcome. This is educational information, not financial advice. Let's walk through the exact logic, step by step. Everything runs on completed bars, so the strategy makes its decisions once each bar closes. The first step is defining the trend regime. The strategy measures how far the exponential moving average has traveled over the last several bars, controlled by the EMA slope bars setting, which defaults to 5. For that travel to count as a genuine trend, it must be larger than the min slope to R frac value multiplied by the current ATR. With the default of 1500ths, a flat or drifting moving average simply produces no signals at all. If the slope is clearly upward, we have an up regime. If it's clearly downward, a down regime. The second step is the pullback. Inside an up regime, the strategy waits for the RSI to cool back down to the PullbackRsi level, which defaults to 42. That represents a dip within the uptrend, not a full reversal. In a down regime, the mirror applies, and the RSI must heat up to 58, which is 100 minus 42. When this happens, the setup is primed, and it stays valid for a limited window set by ARM expiry bars, defaulting to 6 bars, before it expires unfilled. The third step is the reclaim, and this is the confirmation. For a long, the strategy acts only when the RSI crosses back up through 42 on a bullish candle, meaning the close is above the open, so momentum is resuming in the trend direction. For a short, it's fully symmetric. The RSI crosses back down through 58 on a bearish candle. There's also an important safety filter often called the don't chase gate. Any reclaim whose close sits more than MaxAtrFromEma multiplied by the ATR away from the moving average is rejected, with a default of 2.5 ATRs. This keeps entries close to the mean, which is the main way the approach tries to control drawdown. For exits, the strategy uses the ATR to set both a stop loss and a take profit. The stop is placed at 2 ATRs of distance, and the target at 3 ATRs, giving a reward to risk of about 1.5 to 1. Only one position is held at a time per magic number, and position size scales with account equity, so risk stays a roughly constant fraction of the account as it grows or shrinks. Let's read through the MQL5 code as if we were sitting in MetaTrader. At the top are the input parameters, which you can adjust in the strategy tester. TrendEmaPeriod sets the length of the trend moving average at 100. RSI period is the momentum look back at 14. PullbackRsi is the reclaim level at 42, and MaxAtrFromEma is the don't chase distance of 2.5. ATR-SL multiple and ATR-TP multiple at 2 and 3 control the stop and target distances. Now look at the two signal blocks. The first handles a primed long when G_armed is greater than 0. Three conditions must all be true. Cross-up checks that the RSI has moved from at or below 42 on the previous bar to above it now. Bullish checks the just closed candle closed above its open. And near mean confirms the close is within 2.5 ATRs of the moving average. When all three agree, the code reads the ask price, sets the stop loss 2 ATRs below and the take profit 3 ATRs above, and calls trade.buy. The second block is the mirror image for a primed short when G_armed is less than 0. Cross down checks the RSI fell back through the 58 level. Bearish checks the candle closed below its open, and near mean again confirms price is close to the mean. Here the code reads the bid price, places the stop loss 2 ATRs above and the take profit 3 ATRs below, and calls trade.sell. Both sides are completely symmetric, which is a clean, educational way to structure a strategy. Let's bring the logic to life on this illustration. Up top we have price candles with the blue trend moving average running through them as the mean. Below in the subpanel is the RSI, with a green line marking the long reclaim level at 42 and a red line marking the short reclaim level at 58. Watch the first few candles on the left. Price is stepping higher, and it's holding above the rising blue moving average. That upward slope is steep enough to clear the minimum travel filter, so the strategy recognizes an up regime. The RSI over here is sitting comfortably in the 60s, which tells us momentum is with the buyers. Now notice what happens next. Price eases back for a couple of candles, drifting down toward the moving average. This is the pullback. Follow the RSI as it cools off and dips down to the 40 level, slipping into the green long pullback zone below 42. At that moment, the setup becomes primed for a long, and it stays on watch for up to 6 bars. Then comes the reclaim. The next candle closes above its open, a bullish bar, and the RSI climbs back up through the 42 line, momentum resuming in the trend direction. Because that close is still comfortably within 2.5 ATRs of the moving average, the don't chase filter is satisfied, and you can see the buy entry marker appear. The stop loss is set 2 ATRs below, just under the pullback low, and the take profit sits 3 ATRs above. From there, price advances through the following candles in the trend's direction and reaches the take profit target on the upside. Notice the geometry. The target is a good deal further away than the stop, reflecting that reward to risk of about 1.5 to 1. Now the chart tells the second half of the story. Price rolls over near the highs. The blue moving average flattens and begins to turn down, and price slips below it. The strategy now reads a down regime. Momentum has faded, with the RSI dropping into the low 30s. Watch the pullback against this new downtrend. Price rallies back up toward the moving average for a couple of candles. Follow the RSI as it heats up to 61, pushing into the red short pullback zone above 58. That primes the setup for a short. The reclaim then completes. The next candle closes below its open, a bearish bar, and the RSI falls back down through the 58 line, momentum resuming to the downside. The close is within 2.5 ATRs of the moving average, so the don't chase gate is satisfied, and the sell entry marker appears. Here the stop loss sits 2 ATRs above, and the take profit 3 ATRs below. Price then declines into the final candle and reaches the take profit target. So across both examples, the same confluence repeats: an established trend, a pullback that cools momentum, a reclaim that confirms it resuming, and a mean filter that keeps the entry disciplined. That layering is what the approach relies on to stay selective. And that brings us to the end of our look at Trend Pullback Reclaim. We covered how it defines a trend using the slope of the moving average, how it waits for a pullback in the RSI, how it confirms the reclaim on a candle closing in the trend's direction, and how it manages exits with ATR-based stops and targets. We also stepped through the code and walked both a long and a short example on the chart. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries real risk, and losing trades are a normal part of any strategy. If you found this breakdown useful, please like the video, leave a comment with the strategy you'd like me to analyze next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.